Risks and challenges of tokenized stocks, what investors need to know. Welcome. In this guide, we'll discuss the risks and challenges associated with tokenized stocks. While tokenizing stocks offers exciting benefits like increased accessibility and lower costs, it also comes with potential pitfalls that investors should be aware of. Let's take a closer look at the key risks and challenges. Regulatory uncertainty. One of the biggest challenges for tokenized stocks is regulatory uncertainty. Different countries have varying laws and regulations regarding digital assets, making it difficult to navigate compliance. Changes in regulations can lead to restrictions or even the delisting of tokenized stocks from certain platforms, creating uncertainty for investors. Security risks. Tokenized stocks rely on smart contracts and blockchain technology, which can be vulnerable to security breaches. Hacks, exploits, and bugs in smart contracts can result in the loss of investor funds. Even with security measures in place, the risk of cyber attacks remains a significant concern in the digital asset space. Market volatility. Tokenized stocks can be highly volatile just like traditional stocks. However, because they are traded on blockchain platforms, they may also be subject to additional price swings due to the smaller market size, lower liquidity, and the influence of cryptocurrency market trends. This heightened volatility can increase the risk of sudden losses for investors. Liquidity risks. While tokenized stocks aim to improve liquidity, low trading volume can still pose a risk. If there aren't enough buyers or sellers, it can be challenging to execute trades quickly, especially for larger transactions. This lack of liquidity may result in higher slippage and difficulty in exiting positions when needed. Counterparty risk. Counterparty risk arises when the platform issuing the tokenized stocks faces operational issues or defaults. If the platform holding the underlying assets becomes insolvent or is unable to fulfill its obligations, investors could lose their tokenized shares, as the ownership is tied to the platform's custody and management. Legal and ownership challenges. Legal and ownership challenges can arise with tokenized stocks, especially regarding the true ownership of the underlying shares. In some cases, token holders may not have the same legal rights as traditional shareholders, such as voting rights or dividend claims. Additionally, disputes over ownership can be difficult to resolve, as blockchain records may not be recognized in all legal jurisdictions. Technology risk. Tokenized stocks depend on blockchain technology, which can be subject to outages, network congestion, and technical failures. If the underlying blockchain experiences downtime or technical issues, it can disrupt trading and transfers, leaving investors unable to access or sell their tokenized assets when needed. Custodial risk. Custodial risk is a concern when the underlying shares of a tokenized stock are held by a centralized platform or custodian. If the custodian is hacked or faces a security breach, it can result in the loss of the underlying assets, leaving token holders with worthless tokens. This risk underscores the importance of choosing reputable and secure custodians. Limited adoption and market acceptance. Despite the potential benefits, tokenized stocks are still a relatively new concept, and there is limited adoption in the broader market. Many investors may be unfamiliar with digital assets or hesitant to trust blockchain-based securities. This limited acceptance can slow the growth and liquidity of tokenized stock markets, making it challenging for investors to realize the full potential of their holdings. Tax and compliance issues. Tax and compliance issues can be complicated with tokenized stocks, as they often involve trading across multiple jurisdictions with different regulations. Investors may face challenges in reporting their transactions accurately, leading to potential penalties or fines. It's important to understand the tax implications and consult a financial advisor when dealing with tokenized assets. While tokenized stocks offer exciting opportunities, it's important to be aware of the risks involved. Regulatory uncertainty, security vulnerabilities, and liquidity challenges can all impact your investment. By understanding these risks and conducting thorough research, you can make more informed decisions and navigate the world of tokenized stocks with greater confidence.